Yo, what's up, everybody? Good morning. We are back on YouTube. YouTube's not being finicky today. It's great. I'm excited. This bull run keep going. Market's gonna look good. Woo. All right, how are y'all doing today? Somebody said, good morning. I signed up for Rick Center trial last week. Nothing but Green Day since your first day using Rock Scooter. You made a $2,200 day. Oh my goodness. Well, that's many times over your $35. Not bad, not bad. Look forward to learning over the next few months. Look forward to teaching you. This is the wave of the future. Good morning. Great. So I'm glad that we have something to match your style, buddy. Honestly, one thing that was missing in traditional analysis is the ability to have key levels marked straight up, calculate risk and reward, have a way to make a solid trade plan. You're always waiting for an indicator to fire, and at that point you had to decide your plan. With Rocket Scooter, you know how far you want to go, where you want to stop from the start of the day, and you just wait for it to happen. So it's much more convenient to plan out trades you want to make ahead of time. Better planning, in my opinion, is a better approach to trade. Morning, everybody. All right, getting started. Light news day today. If there's anything really happening. Top of my head here. Let's go ahead and take a look at the morning irrational, rational stuff. D band's looking good. We've had this impact red line just chilling here. Nasdaq is a bouncy resistance. I should have deleted a couple days ago, but that's where it is. Do we break out to all-time highs this week and keep going? I'm in the camp that we still do. Market can't be any more bullish than it's getting. I'm very excited to see it push further. We are breaking out the highs in Russell. Now, you know, people risk on the market into least risky things first. Blue chips first, you know, or tech came in. Right, we bottomed out with the blue chips. Tech came in like the slightly riskier, overbought kind of things next. Russell next. Once Russell starts moving, you can see the appetite of Wall Street is still to hold their position. They're building back into their large investment vehicles. So they've longed all the things. They're not selling. They finally built in. The S&P is still likely to creep higher on the short squeeze. Maybe the long run is over. Once you see people rotate in the Russell, you know that it's okay. The blue chip run is probably over. So as the Russell goes up, some of those stocks will be in here or give the effect here that's likely still move up. But this rally up really fast is likely over. It's likely just to trickle up and short cover as the Russell gets the steam. So when is the boom over is when all the things stop getting long, and then obviously dealers are negative on their positions. So take it one day at a time. Today, we are still rational across the board, trading inside the bands. Yesterday, kind of an internal day. We all played, I think people played both sides. I played the short side, other people played the long side. But the market, we knew it was a tight range. So we'll see if today is another breakout range to test the highs. Today or tomorrow, I can expect that we're probably going to try to at least double top this little peak right there. But yeah, all things looking good. We open in 1 minute. Scooter, we're ready to rocket Scooter. We're ready to scoot. Good morning. Hit that like button while you can, while you got you here. All right, we are open. Let's get ready to look at the opening read. As far as the news day goes today, I think today is really light. I don't really think there's anything coming up today. Let's double check. Investing calendar. Today's Wednesday. Yeah, nothing today. Hold on. Things looking good here. Let's see if we get a nice little read on the S&P this morning. Oops. Powell speaks today. I think any news or any signs or anything from Powell is going to be it's going to be to the bull side. They're going to probably hint further. Oh wow, that Russell just pushing out the door to upper DD band. Look at this. Right out the door. See that? That's some steam. All right, let's read it. We got a bull long up. The S&P 428 dip. Long to buy for me today. Looking great. So we'll check Qs. Resiliences are positive. That's a great sign. Mean reversion. Okay, look. So NASDAQ is actually kind of topping out in a balance phase. So any longing from here to the middle is probably appropriate, which could be, this is a pretty big stretch today. That's a decent move. So again, we are outside the box on NASDAQ with positive resilience likely to be support here. I am liking what I see. Not hating it. Not hating it at all. Look at the S&P really quick. Mode 2 resilience. As long as we stay nice and positive here, this is a decent long setup. I'm not afraid of this at all. So we get that little bounce off of the open here. So long go. The rational sides, 93, supporting bullseye on DD. Wow, everything's looking hot. I like it. Okay. I do like it. Oh yeah, this is good. I'm gonna get it pretty heavy. I like it. Still not touching it on this ETF account. I'm very close. I'm just trading my 10K account up 300 bucks already, 400 bucks, 500 bucks. It's going. Good deal. Q skilling. Yep. Let's find upper targets. Let's make sure we have our gap fills. I don't think there's any in this vicinity. Upper DD band is the target to go to today. Front and center, it's gonna be about a 43.25. That's super sick. And of course we can double top the market. I'm not afraid of this market today. I like what I see. Nothing's looking terrible. We'll keep an eye on resiliences today. It's a golden setup day. All things good. DD's not losing any steam. Ooh, baby. I like what I see. Hit that like button, everybody. By the way, scroll down. Y'all love Rocket Scooter. Or you hate it. Either way. You can like the stream. If you hate it, just click that like button harder. Just like smash it. Like, ugh. God, I'm so frustrated. Let's go ahead and mark up our DD band here. Cool day. Woke up this morning, was on Beat the Bell with the Kane Cap guys. I love that show. They are phenomenal. Talked about crypto and what's going on. The regulators are finally starting to, the government, the regulators have had enough. Let's put our money in offshore Cayman Island accounts and trading stuff, circumventing the United. I don't touch on stuff. I say we collectively as American citizens hate us sending our money elsewhere and trading, and Uncle Sam can't take his cut, and the exchanges can't take their cut, and everyone can't take their cut. And of course, U.S. institutions are at risk. They invest in this stuff too, trade on these exchanges. And boy, they don't like that. So that lawsuit definitely has to happen. Something that should have happened. It's something that's destined to happen, and both sides knew it was going to happen. SEC says, well, we might have to regulate you and put some rules down. And crypto is like, well, we operated because there were no rules. It's a clear as day thing. There's obviously going to be no long-term penalty for all of them. I don't think the exchanges are going to go anywhere. I think that they see them as an opportunity to just at least regulate them so that they can actually operate, less schemey-like, and they operate in U.S. accounts. Clearly, there's a lot of liquidity there, and the government would prefer to not have these companies stop dealing in the U.S., as a lot of U.S. investors are very interested in these products. So we'll see. S&P pushing that 4,300. Looking sexy. We'll take it. 4,300 is a psychological resistance, clearly. I do like what I see though. Come on, baby. Right. He's looking pretty good. Sexy today. I like it. I like it. Up to, trade upper DD band is my target on SPY. Let's go. Breaking new highs. Let's do it. Pretty easy day today. I love it. Love it. Let's break that 43 and keep going. Passing the $1,500 mark in profit. I like what I see. I love what I see, actually. Keep pushing. Keep pushing. Let's go. Take the trader at the open. This is mode 2 resilience. Let's let everybody here try to take a guess while I write it out. Just mark it up. BLU has 2 setups. You open, and if you support it open, you trade the next resistance. There it is. If you resist open, you go open, blue, open. There's a V. This is the BLU. DD being bullish, there's support at the bull zone. That's a DD roll. Resilience being positive, mode 2 states that that is support to the next resistance. Same thing. Mode 1 is that we press from here to there. Price is greater than 0. You can't get any more straightforward than that today. It's a long trade to DD band, Omar. So you trade until there's a resistance, and you find next resistance. Not always is the DD band the resistance. It's just the benchmark of like where you can go. I always look for gap fills, opposing walls on monthlies, red lines and yellow lines, Gap fills 2 p.m. Those are all my exits. One of those 5. Right. So I always check, are there gap fills in the way? This is a straightforward out the door, easy peasy. Like I said, I'd like to hit that DD band before noon in the morning. This looks pretty good. I don't hate it. Come here and look. Are there any gaps to be filled? Absolutely not. Let's double check in Q, see if there's anything that has a gap in the way. Clearly gaps become resistances. So here we go. Qs have the ability to go through and fill that gap, and I think it wants to for anything else. I don't know if we break out today, but I do know that there is in the vicinity, there are resistances to be filled. So we still have some upper movements here. Monthly maps still show upper movements. Russell's still moving to highs, and there's no gap to be filled for a while on the Russell right up here. Clean day. Let's double check the maps. Gotta love Rocket Scooter, y'all. Cannot argue with all the good signs. All things looking good. All the alerts green. You notice when you wake up and all the alerts are green and it's bull long up looking and markets just go higher, and yet people use technicals or bear. I like to call the bear porn out there. Like, well, because of this, it's bearish. Because of that, it's bearish. Look, whenever you're out of a recession, you will start to see green lights, and maybe a yellow. You know what I told you, trading in a recession is really hard, right? You're going to sometimes just see irrational every other day. Gosh, man, it's irrational every other day. I feel like they're not getting a lot of signals and I have to sit out a lot. God, this is boring. No, you still got money in your pocket when the bull market comes to golden setup. I'm throwing money at this bull. I made 10K last week. I'm going to make 40K this week. You have money in your pocket when you get these signals looking great and you hit it. The whole point of trading is to wait for what you want to see and then hit it hard when you know everything's a go. So this account being so close to the end point, because these are these ETF accounts, I got to be very cautious. I have to trade off a hedge pressure. That's the rule, and we haven't had a hedge pressure tap with me being around in a while. The last time we did have that, I was actually on vacation. I missed it. When resilience opens at 50, you know it's going to be a good day. When resilience opens at 50, I give it like 2 or 3 minutes to make sure it doesn't fall below 0. It usually tries to fall, and if as long as it falls and hooks back up far enough away from 0, like above 20, 30, 40, it's going to be a good day. Agree. Okay, so identify some gap fills. We looking good there. I like it. Breaking out somewhat higher. I like that too. Can't argue with that. Looking like for today, I'm going to try to go for a 43.25. That'll play out to be a 9K day today if it goes all the way with my contract size. I just got something moderate, 5. I didn't get anything huge, so that I could step in case we did fall there. So I try to trade all the way to the end. Easy as that. What's the ratio of rational, irrational, and bull to bear markets? Honestly, in bull markets, you will see, like, you can see weeks in a row of 0 red signals, irrational rules. This is an example. How many golden setups have we had, you guys, in the last 2 weeks? I think like maybe 5 or 6 days have been no irrational signal. Or hedge pressure breaks to the upside would be the only irrational signal we have. Right, so you see that lately it's been clean. It was clean. Even yesterday's bad news flipped everything. Yesterday's bearish type setup broke your hedge pressure to the upside, continuing to go. This is all short squeeze still in this environment. I usually trade a mix of everything. Currently, right now, I'm trading futures. About to pivot to doing an options challenge myself. Give me 1 second. Can you hear me? All right, what's the last thing you guys heard me say? Sorry. Let me answer some of y'all's questions here. How long have I been muted for? Okay. All right. Robbie, can I... sorry, I was chatting with someone. Can I... well, maybe lock the open? Bull long up, all things looking great. Rewind the stream to the spot where I'm drawing on it, and it'll tell you what I saw. To answer your question... why should people, trade futures versus stocks versus options? I'll tell you, futures are the easiest barrier of entry. The tax rates are better in futures. You can, as long as you control your position size in futures, it's the best of all worlds. You can trade a broad instrument like the S&P, very diversified. So you don't have to really study a lot of microeconomics. You just have to know what affects the macro market. Futures, the best barrier of entry, or lowest barrier of entry, I think. It takes less capital to start trading. There's no PDT rule. You can get out of positions overnight if you want to. You can trade, if you have $100, you can trade anything as low as $1 per nano contract, or you can lever up 25 times against your dollar and trade $2,500 worth of leverage account. So you have the benefit to swing your leverage as high or low as you want with that granularity, and the taxes are better. So at the end of the day, when we start making money, day trading futures the only way pro day traders go. At least it's part of your overall recipe of trading. If you're day trading and you are not day trading futures, you are missing out on what the pros know, is that futures is the best way for you to build what I like to call your spending money. You want to make X amount of money a month as a trader. Options is not what you're going to want to do, and stocks is what you're going to do. Stocks is where you want to invest in the long haul. People should buy and sell stocks. They believe that the stock market is valuable over a long period of time. In a good bull market, stocks can gain, 0 to 10% a year. You diversify your money and put it into a basket of stocks. Hold it for at least a year so you get long-term capital gains. You get all the benefits of long-term investment. And investing in the stock market, like, no one should ever day trade stocks. That's the dumbest thing to do. The taxes are worse. The gains are small. Your granularity is good. You have to buy the cost of the stock. And you only go to zero if the stocks go to zero, and if you're diversified, at least you should be safe from one of the companies going under. And you're betting that all the companies don't go under at once. So stock market is a protected portfolio with very low risk relative to like futures. But the gains don't pay your bills. And the goal with the stock market is the stock market inflates due to inflation. Like I said earlier, like, stocks always go up. You always say that stocks go up. The real answer is stocks don't always go up. Stocks, on average, almost all stocks go to zero at some point as companies become less value or go bankrupt or whatever. The stock market, or the index, always goes up. That's the appropriate answer. Index always goes up. Believe it or not, over the number of companies that have been in the history of companies, all stocks actually go to zero on average, right? So the answer is, why does the index always go up? And the index always goes up because of inflation. Not because everyone's just constantly bullish the thing. They are always mostly constantly bullish the thing. But why are they bullish the thing is the answer. Well, because anything with value goes up because of inflation. The Fed tries to target 1 to 2% inflation a year, right? Ooh, here we are, back to my dip. This is what I want to see. Okay, that's no bueno. I want to add right here. So why do they always why does the stock market go up due to inflation? Right? Because the cost of things go up. Cost of bread goes up, cost of an iPhone goes up due to inflation. So on paper, company sales are always going up, right? So the value of the company, right? The value of the company based on sales always goes up. So stocks are trading like over earnings, right? So earnings always go up because you're always earning more dollars on paper because of inflation. And so that works its way into the price. Anything that has tangible value is susceptible to inflation. So why you invest in the stock market is because inflation means you lose 2% a year. That's the Fed's target. It's your baseline. And the stocks just trade over earnings. That's the whole point. So stocks outpace inflation. So if you want to put your money in a savings account and make a penny for every, $10,000 a year, that's silly. You put your money into like money market accounts, make a little bit more. You want to put your money in a stock market. Now you're taking a little bit more risk because companies can bankrupt, but you're looking at like, 3 to 10% a year stock growth in like a Vanguard or something to outpace inflation. So it's a more moderate investment strategy to beat inflation. But day trading stocks at maximum tax rates, not really the most beneficial thing. And options are taxed the same way, and you have the added complexity of the Greeks, and you can lever up to 1,000% gain, which means one single options contract actually devalues while it just sits there. There's a bucket with a hole in it. That's what the Greeks are for. The bucket modifies itself all the time. There's a faucet and a hole. The hole gets bigger as the drain gets bigger. The faucet turns on and off faster to refill the bucket. And the option has all these mechanics that change its value, even when the underlying price just sits still. Time is a big factor, and volatility is a big factor in the price of options. So newer traders jump into options because there's a lower barrier of entry to trade them. You get a cash account and YOLO your trades. You get thousands of percent gain. It's attractive new traders, but they don't understand that these instruments have all this added complexity. And if you're wrong, not only on where price goes, you have to be right on how it gets there and how long it takes to get there. If you miss on those last two, then you're missing on options trading. You have to win on all three levels. Stock, you have to just bet up or down. There's no time frame. The stock doesn't decay in value over time. Futures are the same way. There's no decay of value of your investment because of time or volatility. Options, again, you have to bet up or down, or the third is that it doesn't go anywhere. That's also a bet with options. It stays still. If you want to bet up or down, the question is how far up does it go and how long does it take to get there and how does it get there? If it goes straight there, great. Or does it zigzag to get there? Not great. You have to overcome all those hurdles and make the appropriate choice, not only of what your strike price is, but when you buy that expiration. And that doesn't sound easy at all. That's an expert level thing that gives you maximum ability to blow up your account. Options are the stupidest thing to day trade unless you've got maybe 5 to 10 years of experience. You're doomed yourself to blow everything up. Options are extremely hard. Take it from me. I'll let you know that. So options being really hard, what are they good for? Options are like insurance to me for your stock account. You've got, like, here's how a day trader should day trade. 80% of your capital should be invested in the stock market and options to hedge. Split that up however you want. Maybe 60% stocks, 20% capital used to hedge, and the other 20% is in day trading account like a futures account. Your futures account is the money that you withdraw every month to pay your bills. The stock account is your savings in case your futures account blows up or you just want to grow your millions of dollars slowly at 3% a year. Think about it, $1 million grows 30% a year at $30,000 a year at 3%, and you're doing absolute dick to it. And you take that $30,000 you make and spend a smaller portion of that on options to protect your stock account to buffer you up so that your savings never goes down. That is an appropriate way to be a day trader for a living. You want your bill money, your house money, your car money. You want 5 to 10K a month. This future is the only way to go. You're not going to make that trading options or stocks. And options, the fact that you can go to zero, you have zero money, you can't trade. You can't pay your bills. But if you've got a couple 100K in the stock market, you can always sell some stock and get some money to pay your bills or refund your blown up futures account. So the option in reality is that you should grow a bankroll, for instance, 10K to 100K in futures. What am I going to do with that 100K at the end? Well, I can always take 10K and start over, and 10K to 100K again, and that 90K goes in a diversified stock portfolio where 60, 70% of it's invested in the stock market, and the other 20, 30%, whatever I choose to do, is going to buy options against that stock portfolio and hold those things for the years. That's exactly what to do. Brett just made $3,300 playing the Gap on NQ. Your biggest trade to date. Brett, let's go, baby. Let's do it. How do you choose what stocks to buy for the long term? Well, I mean, there are people that make entire careers off of that question. I mean, how do you pick a stock? It's something that, how do you pick a stock? There's a million reasons to pick a stock. I'm not the best advice of picking a company, but I use monthly map to know what's bullish and what's not. And when monthly maps start to look bearish, I don't pick a stock. The rule of stock trading, especially as a retail investor, is you should trade things that you like. Because anything that you own, you should know everything about. You own your house, right? You should know everything about your house. Every cabinet, any asset that you own, you should know everything about. If you don't, you've made a bad investment. You should always constantly reassess the value of any investment you have. You should always be aware of the market that your asset is in so that you can look for opportunities to buy, sell, or reinvest. Anything you own that has value, you need to constantly understand what values it and look for opportunities. If you're not thinking like that, you're not thinking like a trader either, right? So how do you choose what stocks to buy is the same thing. If I know every broken cabinet in my house, or if the roof is leaky, I know what value my house is losing and what it's going to cost to reattain that value, right? Whereas it's still good, it's still bullish. This is a dip to buy. So why pick a stock? Because it has value. You know everything about it too, just like a house. If I own Tesla stock, I need to be very, very, very in tune to Tesla as a company. I know everything about them. The business plans are, what their forward guidance is after earnings, what they are looking to do or change. And I need to bet that gives additional value or takes away value from the company. I need to understand microeconomics. Company buys back his stock, what does that mean? If company invests in efficiency, what's that mean? If company lays off 10%, what do those things mean? Like, how do traders respond to those things? Microeconomics is a big part of trading any stock. So you kind of have to understand what moves a stock, and that only comes from years of practice trading a stock. And good news comes out, you can understand how traders' appetite is for that thing. And the more you do it, the more you understand that. So in general, the easiest way to pick a stock is trade a company you like that you believe has value to you, okay? And then as you're trading it, you start to learn how the rest of the world values that thing, because each person is the sum of everyone's value to you is really the value of that stock. Everyone has different reasons they find it valuable and different values they give it. And the sum of everybody's behavior is the actual price of the stock. So you need to have a real reason why you value it. Don't worry about why other people value it, right? And as you trade it, you'll start to understand why people value things as you feel that experience of that stock. Now, if the company goes bankrupt, your stock could probably go to zero. Think of it like that. So you diversify and you trade stocks. Easy as that. So how do you choose what stocks to buy? Is that you find things you like, and then you go to monthly map and see, is it good? I like Tesla because of whatever reason. Okay, let's start over. Is Tesla got room to move to the upside? Let's open up a daily chart on Tesla. Absolutely it does. Look at this. Everything's been trading down, and tech is trading to all-time highs. Apple's almost at all-time highs. Stocks like Tesla have plenty of gaps to fill, even to sustain bearishness, like waves down. Tesla has a gap here. Okay, great. I've got some swing potential in Tesla back up closer to 300 maybe. All right, what's the monthly map say? Just give me an example. This isn't recommended advice to buy Tesla or anything. Just kind of throwing as an example. If I like Tesla, when I buy Tesla, right? Okay, let's click the monthly map button and see what Tesla says. Bulls are becoming more bullish over the next month. Bears are becoming less bearish over the next month. Great. Tesla's a great buy from here. There are clear resistance targets it needs to achieve. And I've got bulls behind me and bears getting out of the way. Great. Tesla's a great stock. Well, what about Disney? It's one of my favorite companies. Should I buy Disney? I love Disney. I fucking love Mickey Mouse. I like the Marvel stuff. And, Disney gap down on earnings. Oh, well, okay, that's lower. Great. Maybe it's a dip to buy. Should I buy it? Monthly map. What do you think? Yeah, actually, I was trying to use Disney as the bear example because yesterday was bearish. Looks like Disney has also flipped to the bull side. So Disney's bull side is getting slightly better and the bear side is getting slightly weaker. So for the last 2 or 3 weeks, right, Disney was just not a buy. And now it's starting to manifest where you can start to see the positions of people going long this thing. So Disney is a bull setup. So ideally is like, yeah, I want to see there are other bulls behind me that are bullish over the month. That way I'm in faster than they're in. That's the whole point of trading a stock. You want to get in before other people get in. You want to see things before other people see things. These are institutional positions. So institutions are already starting to buy this thing, as you see that bull structure is responding here. But then you also know that retail is not responding to this yet. Imagine somewhere in here I want to be long Disney. Somewhere inside of here looks great. And then maybe retail comes in after I do. Right? Let's think about it. This is an example. CCI, all right. Dude, that looks weird. That map looks really weird. Ooh, let me get back to the S&P. Hold on. Looks like we're trading down. Make sure everything looks good. Res is still hanging in there. Wall Street trying to find a reason to sell this thing. Nasdaq finding lows for the day, lower lows for the day. Ooh. All right, let's look at S&P. Make sure I can get it right at hedge pressure to double in. I do like what I see for the long haul. Make sure Res stays positive. Nasdaq pulling back a little heavier. Russell hitting its upper DD band. That was very unexpected today. Careful on the QQQ hedge break. Yep. Res still hanging in there. I wonder which stocks are filling their gaps today. A weakness in tech, which is good. My long entry was right out the door. Clearly, if I were to add any to this position, I would add right down here to trade it, to continue to trade forward. Keep an eye on Res. Things look kind of okay. Still looking good. That's just a little odd. QQQ today wasn't bullish. Remember, it was in a mean reversion sort of area. So it is passing through liquidity pockets and it's just chilling right here at hedge pressure. Again, the market is loving hedge pressures and dips, right? All right, so I'm going to add to it when we get to hedge pressure. Like I said, it's all or nothing trade for me. I want to get this run here. Not scared of it at all. Things still looking good. Let's make sure this light stays yellow and Nasdaq comes right back above hedge. Microsoft is bringing SPY down for show. Strange market. For a SPY call, how would you know if 428 or 429 is a better strike price? Well, okay, let's start off with what you're trying to achieve. A question like that, Jeff, I love challenging questions like that. It shows me where your mind is as well. Let's not skip all the important steps when you're explaining something to somebody. You should always be explaining to yourself as well. You're missing about a dozen other factors. For instance, what are you trying to do? Are you swing trading or day trading? Are you trading just naked, or are you protecting an investment? Give me all the information and maybe try again. And I'll help guide you on your thought process. It's a great question. So if the market's dipping and you're buying a call, are you trying to day trade this? Is it 0 day? Is it a week out? What's your expiration? What's your target? How long are you willing to hold this? How much of your portfolio are you investing in this? All that stuff is important. All those pieces for options, right? In and out, like today, okay, like short term. Are you doing an actual 0 day? I love naked. Oh yeah. Is it 0 day or the expiration a week out? These are all important to answer that question. 0 day means you lose all of it if it's wrong today. Today, okay. So you're doing essentially gambling, all or nothing sort of trade. Okay. And you're going to trade on a dip. You want to buy a call that you make money on today. In and out should always be a delta play. You should trade out of the money, never at the money, because theta burn is the highest at the money. So an example is if it dips to 428, don't buy 428 calls. Buy 429 or 430 calls. And when you bounce, you trade on the delta and gamma and close out. If you're at 428 and you buy 428 at the money calls and it sits at 428, then you're going to burn theta the fastest as it's just hovering at 428. And any instant below it's going to be very sensitive to theta burn. Your value is going to drop so rapidly, right? So I always trade 0 days, slightly in the money, more expensive for better delta, than out of the money for less theta burn and more percent gain on your investment. So an example, if it was at 428 and I wanted to buy calls for the day, I would buy calls right underneath my exit target. So I always will find my exit target. An example is today. If my exit target is here, then I want to buy calls that I know are going to strike through if it hits my exit target, and not be at the money for a long time, but be in the money for most of the time. So today I would buy 429. Any options traders, what would you buy if you were 0 day? You wanted to buy the hedge pressure dip. Would you buy 429s, 428s, or 430s? My theory is that what your strike price is, you want to be away from it as fast as possible. Every instant you're hovering at your strike price, you're going to lose on theta fastest, right? You also don't want to buy something too close to the edge as it's fighting to get there. You're out of the money. You're going to start decaying as well as you approach the money as well. So Travis is like 430 is probably the better way to go to be cheaper. Yeah. I want to pass through my option on the way to my target. That way I get that gamma burp as I push through it. And I'm out of the money far enough that I don't really feel theta burn that much. You're gonna burn theta at a very weird rate doing 0 days, right? I do out of the money, but see, the problem is out of the money is higher reward on a percent gain, but higher risk you go to 0, obviously, if you don't get out fast enough. So if you were trading out of the money, for instance, like 430s or 429s, probability of you going to 0 is much higher than trading at the money. So trading at the money, there's a higher burn rate of theta, while your investment can likely have a better probability of not going to 0. So that's the push and pull of the two. So if you're trading 0 days that are out of the money, you need a smaller position. You get a bigger percent gain. If I were to buy 428s, maybe I'll buy 10, right? If I were to buy 429s, they're going to be cheaper. So for the same amount of money I could buy 10, I could probably buy 20 or 30. I'd put even less on the table. I'd buy like 15 or 20. Even though the price would be half, I would put in less of an investment total for out of the money, because probability that they go to 0 is higher. So scaling rule of thumb is the more out of the money you go, the less total money you invest on 0 days. Like if you have a strategy that you try to play 1,000% gains or runners, you can have an account and do 1% of your total account each time, and now you have 100 trades that can blow up. For the one that wins gives you 10 for every one you lose, right? That's just picking a random strategy. So you have to understand the Greeks that go with it, but that's a really good answer for me. I think out of the money is the better way to go. But if you're in and out, yes. If you're trying to trade for like the whole day, like you hold this thing for hours and hours and hours, you're going to really hurt on theta if you pick the wrong strike. If you're trying to look for an hour, get in, get out, it's going to be not really that big of a deal where you pick. You think of the other mechanics. If you're going to hold all day, theta is going to be very important to you. The longer you're going to hold, the more in the money you need to buy. That's how I feel. Because you want to make sure it doesn't expire absolutely worthless. You want to expire with some value, right? The way to ensure that is you trade in the money, but far enough in the money that you don't feel theta burn as well. And that comes down to having to spend more money on the options. See, you always rob Peter to pay Paul, as they say it. You always have to know what you're paying for and what you're getting out of it. In the money costs you more of an investment per delta gain. So you have to have more money tied up in that trade, but the benefit of that is it likely doesn't go worthless on you. You can likely get out of that trade with some value in it. There we go. There's hedge pressure. Let's watch. Ooh, resilience is still good. Boy, what an awesome... Just be cautious today. Nasdaq is really shit in the bed. Spy hedge pressure. Let's see what we got. Let's double check the news and make sure there's... I know Powell's supposed to be talking, but is he saying anything right now? Quit robbing me, you're tired of it. Too bad, Peter. You gotta pay Paul back. Out of the money is to give you huge percent gains, but you have to time those right. You have to get in right at your balance point and get out right when that momentum turns on you. Almost like scalping. Out of the money 0 days are the riskiest thing and had the biggest gain on them. But you just trade a little bit of it. You know, that's where you get your 1000% gains on some trades. But you want that move to be quick. So you're going to need momentum. You're going to need it to be not choppy day, not volatile day, like things like that. If you want to, you know, hold it for half the day or 2 a day, you want to be closer to the money or in the money. So at least you don't walk away with 0. And if you are out of the money, you just have to know that you plan the amount you invest to go to 0. If I'm wrong, I'm going to lose all of this. Okay. If I'm right, I'm going to get 10 times the investment. Okay. That's 10 to 1. Things like that. Make China raise 25 basis points unexpectedly. Oh. Where's my financial juice? 4.75 on a 4.5 forecast, so interesting to see that. Come on, financial juice, let's go. My news, let's go. I heard my cat trying to break into my office. Being such a bad boy that cat is. Res is looking good. This is looking great. Just be careful. Possible hedge breaks. I'm adding to my long here. Small position, better position. I'm gonna have a cost basis right here. I'll get out if we break hedge. Be unfortunate if we did take 2 losing days in a row, but it still looks okay. People are selling a little bit of their tech stocks, as you're seeing. The S&P is still trying to find a foot. It's rallying off of every dip as people are dumping tech and getting in the smaller caps. So you see that tech is exhausting a little bit, but it's not necessarily going to collapse out. I still have faith in the market. All right. Look at Res holding 12. Res is a 12 right now. This market looks hella good. You can't get better than this. We had a trade last week. Same thing. It traded up, fell to hedge pressure, traded up again. So let's keep QQQ in mind. Let's double check what it's doing. DD is strong enough that the float is going to take effect. But remember, we are irrational markets, so just be careful. If you do anything from here. Irrational market means small trades, obviously, always. Not investment advice, but things looking pretty solid here. I would pull the trigger on this if there was not irrational market, though. Index divergence sign is up. And now went red. The snapback is going to be pretty brutal. So this is an unusual roll. Volatility is going to be high. Index divergence kicks on. So expect volatility. Volatility is the amount at which like something's going to move up or down. Right? And look, VIX is, you can see volatility is going up. This is something that we teach as well. Anytime you have index divergence, you can expect volatility to go higher, and you see VIX is climbing up a little bit. That's normal. So what happens is you're having discrepancy between all of the indices, right? Index divergence rule is showing you that. Just look at them. It doesn't take a rocket scientist to see this. You have the S&P trading down a little, NASDAQ trading down a lot, and Russell trading up to highs. See that? So clearly you see a very severe sector cycling. You don't see people liquidating positions and going to cash, or all things to be trading out. You see this general shape where shorts getting squeezed out of the Russell. We can see that. You can also look at the Russell and the commitment of traders and get that answer as well. People are getting out of tech, which the S&P has some exposure to tech, but it has resiliency elsewhere. So people are dumping tech and jumping into smaller caps to help aid that. So not afraid of this market when I see sector rotating, but I do know that this red index divergence light means volatility is going to go up, which means I'm going to have some stronger dips to buy, which I like. Now let's just double check. Make sure financial sector's looking strong. That kind of mirrors the S&P. Okay, XLE should be strong. We got production cuts in oil, which means oil prices should go up, which means XLE should be going up, which is great. Let's look at XLK. Should probably be trading down because NASDAQ's trading down, and there you go. You can see the story without even have to, look, I nailed all of those. Understand why things happen. Right here, it's the same thing. That small caps going up, tech selling off, and if you don't see the S&P selling with the same effect, you know that some of the sectors that are unique to the S&P are doing okay, right? The NASDAQ doesn't have financials and energy, and that's a big part of the S&P's market cap. And some of the top 30 stocks are going to be in those sectors. So the S&P is not just tech heavy at the top. NASDAQ is pretty much only tech heavy at the top. So while the S&P is trading down, it's because tech is affecting it a little bit, but every dip is being bought. Every red is finding green because people are getting out of tech and getting into smaller caps, which are in both of these. Right? You have small caps at the tail end of the S&P, you got small caps in the Russell. It tells a great, beautiful story of the stock market, doesn't it? Not scared of this at all. And this is why I say NASDAQ is weird. I said that this morning. NASDAQ does its own thing, but doesn't tell you the whole picture. If the rest of the stock market is stable, then it's not going to move at all, even if people are dumping tech. NASDAQ is not a reflection of the market. The S&P and Russell are. This is the diversified stock market, or these two indices right here. If Russell's going up and S&P's just dipping a little bit because people are selling off in tech, you got to say, well, what are they buying? If they're moving to cash, then all the things are going to go down, right? But if they are moving from one sector to the next, then it's okay. It's a safe dip to buy. Why is the sector tracker not loading up? Spider website down? Today. Is this right? That can't be today. Tech down 0.6. Staples down. Financials down. Okay, maybe that is today. Yeah, it is today. Wow, only 0.6. Oh, because tech gapped up. That's why. Yeah. So it's basically just a little bit below its open. We gapped up and sold off on that gap. Resilience hanging tight. So I think that overall, stocks should probably hold their own as well. Now Russell hitting a clear resistance right here is going to be a fight for the S&P. Still looking pretty solid. I like it. Boy, I'd love to touch on every DD band today. Whew, that would be great. So R&R is pretty tight on this one. Thank you, Sweep London Lows. How are European markets trading off this BOC news? It's not an indication of what our FOMC is going to do. I think the plan for the FOMC is to go to zero rate hike. Okay, that's not looking so hot. Shoot, I'm muted, my bad. Okay. Float. Why do I keep muting my mic? Float is pretty easy. We have a video called Float Failure that talks about this. DD is definitely greater than 0.6. Okay, so the float rule is going to be active. The float rule states that as long as the market sustains bullishness via DD, then the lower band is for the market to remain stable. The lower band is not going to want to touch. It's going any of the three, and so Nasdaq's the closest one. It's the first fight we're going to see. You're going to see some kind of mysterious buying power slightly above this green line. It's not going to want to touch. If it touches, it's bad news. No longer trust what you see from there. The market is absolutely irrational if you touch the band against DD roll. So what it is that you're going to want to see like a space right here where volume starts to pick up even before you get to the band to keep it from going there. If you touch the band at all, you're on high alert. Even if you touch the band and do this, it's not rally potential. I was actually teaching the video on this and it touched the band and rallied. And I was like, you don't trust anything once that band is touched. And what we saw was that. Like a drop candle, and there was like a mic drop moment on the actual lesson. So the idea is once if it touches the band and it rallies up, you got a Hail Mary. The universe threw you a bone. I get out. I get out of the way. If I get anything thrown my way. If I am a bull, I take the bet on DD that this is a float. This is like a longer term support. For the day, if it fights here and holds, then we're good. It maybe not, it's gonna rally, but it's gonna try to hold. And then I would take the bet there. If I'm a bear, then clearly I would be bearish off of something, and I'd want that to reflect bearishness in general, which it doesn't. So if we have like a sell-off day today on my long position, I would just be managing my long position in general. So we're gonna keep that front and center and watch that because that is really what's important today. See what it does. You're gonna see this. It's a really cool trick. We call it DD float. And if those of you who've tried out the extended trial, please go watch that video. It's called DD float and DD float failure. There's two videos. I think there's two videos on it. Like, you're just gonna see a cushion of buying right when you get close to it. This is a mechanical thing in the market. And the real rule is that it's not a buy opportunity. It's we know the market is going to lose its integrity if you just have that band. So if the cushion or the float, as we call it, doesn't support against the selling pressure, it means the selling pressure is unusual. And clearly the instability will reflect. Okay. All right. So let's see if you get the volume. So when you get close to it, what you do is you want to zoom way in. And you want to see that there's volume coming through. You want to see wicks. Is there buying anywhere? It's all robotic this one. The S&P's starting to pick up a little bit of volume, but it's not looking super floaty just yet. We want to see some spikes in Nasdaq. Let's see if we get there. Float is fun. It's a fun thing to watch. What's happens to do is if the index is squeezing harder than the stocks, that's basically what you're saying. And that's like a break point where they basically detach from each other. And the index is falling so fast, it can just drag the stocks with it. Let's see if we get there. Right on the edge. If it touches, it's going to be a problem. And there it is. Here's your float. That's what you want to see. Like literally a tick away from it, you're going to see support, hopefully. It's really fun to watch. and it starts to pick up, you see that candle's getting very violent. Like, it's not just nice and stable like the other one was, just gently drifting lower. You can see that there is a fight here. Y'all see the fight? It's a fun thing to observe. You're watching robots playing right now. This is a margin call, high alert margin call area. You break that green, market makers can't hold that green line, markets get a little crazy. And what's cool is that you guys know, we know what we're talking about when we call it the flow. We literally have a name for it. We have videos that teach on this very process. It's a fun thing to learn. It's trippy to watch. Again, there is always support at least a tick away. It doesn't mean it has to support and not fall through it. It just means that this is where the stock market gets overwhelmed by the selling pressure of the index. The stock market's bullish. The index is being squeezed. Who wins the fight? Does the index ultimately survive and snap back into the stocks, or does the index die and bring the stocks with it? And the float is your answer. Can we get this market under control against the selling pressure? ED is such a cool thing. Like I said, as long as you float and support, you can take a breath that the market's going to stabilize, and that, you know, S&P's resilience is still positive. That's great. S&P DD number is still 0.87. That's great. Is the market going to crash from here? If you don't touch that lower DD band, the answer is no. If it survives, the answer is it will ultimately hang and survive. So watch out, because it's trying to fight. Like, every time there's people selling, and the selling pressure is pretty heavy, if you touch that green line just one time, it's game over. Yeah, in irrational markets, you just want DD to be above 0.6. And it doesn't mean float doesn't work. If you touch that lower band, it becomes irrational as well. It's another irrational reason. There's float again, part 2. Do you see that magic fight off of the band? It's very interesting how that happens. Now, to go into all the things we understand about what's going on there, it's a whole different topic. So even irrational, it's still there's still an attempt to do it. The reason the market makers let go is because they can see the stocks start coming down with it, and they go, okay, you know, and you get possible margin calls on there. So there's always preventative mechanism to keep these margin calls from happening. You don't ever want the index to fall faster than the stocks, because one product shouldn't bring down the entire stock market. That's bad for everyone's business, right? The index has to maintain its integrity of tracking the stocks at all times possible. If a major hedge fund is getting a margin call on index products, they shouldn't topple the entire stock market. That's basically what this is telling you. But if they're big enough, they can, and then that can create bigger problems. But you can see that the desire is to keep it away from this area where positions will flip rapidly, exactly at that green line. It's a big deal. This is if the way that I deal with float is the following. If this band touches, once this band touches, it's risk and reward. Put your stop loss wherever you want to put it. 10 points below, and even if the band touches and it rallies very quick, get out at some profit and walk away. Once it touches, the market's going to destabilize. Even if it touches and rallies, green candle, top of green candle, top of green candle, it's random at that point. So if it touches and bounces really heavily, be like, okay, thank God, I got a little bounce. If it touches and hits your stop, you're done for the day. That's the best way to trade that float situation. A lot of times it will touch and bounce very quick, and then you just bail. If it touches and falls your stop, then you stop. That's how I do it. Again, you can see how adamantly the stocks are willing to, or the index is willing to hold its own against the stocks. So let's, you know, if you're a bull, say your prayers. If you're a bear, be doom and gloom. You see, there is always some action there as you get close to it. Like I said, if you touch it, it's a bad news deal. You can see that there's attempts to buy the Russell off of the float. There's attempts to buy the S&P off of the float. You can see that the market is trying its darndest. Now we touched it. Game over. Watch this. If you're going to get, if I get a big red candle today, I'm out. Let's find some, okay, we're going to do irrational illiquidity pivots. Let's go. Let me show you something. Okay, now float has failed. Let's talk about it. We got to find some resistance targets along the way. Don't trust anything you see from here. I don't care how green stuff looks. Right? Okay, let's look for some viable exits. Risk management on. Okay, let's do some red lines. I'm gonna first resistance I can find. This is bad news for today. Market's going to be very random and irrational. Watch resilience today to make sure the S&P is not going to go crazy. All right. There's resistance there. Let's see if I can find a nice little impact. Looks like we got something here. Yeah, that's basically it. Okay. Mapping out some IRLs. Remember, don't trust what you see when float fails. This is not a, ooh, there's green candles. It's going to rally for the day. Let me jump in on this. You can do whatever you want. Like I said, not investment advice. There's some destabilization effects going on. Okay, there's a target there. There's a potential target here. If I get a rally maybe to there, like I said, this market's getting pretty bad pretty fast. Float failure is a big deal. Volatility is going to go up. Let's double check. When you have that float failure, volatility is going to get crazy. VVIX is going to start responding. And you're going to see some, as you get closer to float, you're going to see volatility is likely to move. So watch out for VIX running today. You see how it gets crazy? Look at that. This red candle drops out of nowhere. The market gets really fucked up when float fails. Resilience just went negative, so this is bad news bears today. Not good at all. Gets pretty violent pretty quick. Now you're irrational DD band break. Pretty cool how it works, right? As soon as you fail, it gets weird. Don't trust anything you see. That means I'm not going to jump in and try to short this either. It just means I'm done for the day. Just going to show you what the rest of the day is going to look like. Whenever you start to become irrational, illiquidity pivots are the way to go. So now any upsides today, these are limits, right? So we had a couple of places to look at. Let me actually just do this. Okay, let me delete this. This is a run length today. So essentially, when you're in these illiquid periods, like when you have irrational markets, you're going to be using the red line trick to try to find any moves. So today you tell yourself, okay, any upside is limited to this range right here, and you're going to keep dragging your run length down as it goes lower. So there's market is definitely not rallying today, and this can potentially collapse the stock market today. Be very cautious. So any upside today is not to break likely this impact red line off of whatever's going on. So keep dragging your run length so that you can find resistances on the way back up, and your impacts are going to possibly be there to set yellow lines if there is. This is a top that sells off and crashes today. Whoa, what a crazy day. Would have seen that coming, right? And we don't trust anything you see once TD band breaks in the face of resilience being positive and DD being very bullish. That tech selling is really hard today. It's brutal. Look at that candle. That nothing is to be trusted. I don't see that and go, let me short this. I don't see that and go, let me buy this. It is a weird day. You need things to stabilize. If the market goes back inside of the DD band and stabilizes, then and all the data still looks good, it's risk and reward at this point. Whether you're trading or not, it should always do risk and reward. How much are you willing to lose versus how much you're willing to gain? So I do this to say, okay, if I were to be in a trade, how far am I willing to gain? Okay, reward is likely there at the best. Profit taking there. Where's my stop? So when you have these downside floats break, you need to go all the way to your illiquidity pivots and start finding those pivots. Y'all see that? No, what you're seeing today, Tech, is the index is getting squeezed really hard, and it got squeezed just a little too hard that you were losing control on it. The stocks were like, okay, we're comfortably trading down. The index is, they're like, oh, the index is being dragged down really clear. Imagine the stocks are on and the index is tethered to the stocks with a rubber band. And the stocks are just moving up and the index starts moving down. That rubber band is stretching and stretching and stretching. Typically, the stocks will pull the index back up to it. But if you get to a point where people are rolling out or getting margin calls and irrationally dumping index products to the market, then the rubber band gets really stretched and then it can snap. And then now you've got a deterioration of that connection. They completely trade against each other. And you'll see that the market loses control as people run all over the place to try to hedge and safely squash whatever fire you see. So what this is saying is that stocks are falling. With the float is active, the stocks are falling to a reasonable level. If the float is not active, then what's going to happen is that the stocks could fall and start breaking key levels. Apple, for instance, right, has fallen and is still bull long up, right? It's not collapsing, but once float has failed, could indicate that Apple can be hedge break in the works, right? So while the stock market is still solid, like if I were to look at Apple today, this wouldn't scare me, right? This looks pretty normal. It's not really that crazy yet. The index is moving faster than the stocks, abnormally faster. Like Tesla just fell to half gap. Tesla gapped up and hasn't even filled its gap. So like when you look at the stocks, DD is going to tell you that the stock market looks fine and it just looks weak-ish, but even major tech is gap and go. Still, we gapped up and we're only filling a little bit of the gap. And in the futures, the Russell is still rallying despite what you see here. So that's what that float failure tells you, is that in the face of the stock market, the stocks aren't going to look as terrible as the index is looking. It means the index has got a little extra heat and selling pressure on its own accord. Makes sense? All that means is that big firms and funds are getting squeezed on the index, but they're not necessarily dumping the stock. I mean, Tesla's moved from 228 to 225. It's not even 1.5% of change. Very little change on the stocks, right? Resilience is barely under 10. It's like, this is so weird to see the index dip so hard and the stocks still aren't collapsing. Typically, the index will reflect the stocks. If the stocks are collapsing and the index is float failure, I would understand that. Stocks falling to half gap and hanging, not terrible yet, right? So that detachment, that index divergence can cause some issues as people roll too hard from one into the next. But in general, you can see how the stock market still looks, some stocks still look okay, right? Look at some of the sectors. XLE still rallying. XLF still not crashing, right? XLC collapsing. That's when there's your NASDAQ, right? XLK collapsing. There's your NASDAQ, right? So this big detachment is just one of the things. Staples looks like it's down as well, and healthcare, which is also a big part of NASDAQ. XLV hanging in there. XLP hanging in there. You can see that big tech doesn't necessarily make a market. So you be very careful. Remember, don't trust what you see on float failure. Market's a little crazy. This is not an opportunity. Oh, let me get it on the stip. Ooh, let me short this low. This is a market's going to be 100% random and chaotic. Risk management turned on. Yep. Back to the futures. You always do illiquidity pivots when markets are irrational or you're outside of DD bands. You always look for yellow lines, red lines to find support and resistance. Let's see if there's any on the way up. Do we have any resistances here? Like, what do we have here to look at? Let's go ahead and see if we got any pivots to play with here. I do my red lines like I should have. I'm still very bullish on monthly maps and DD strong. I'm not scared of this, even though it's a pretty nasty sell day. Okay. I didn't do this on the tick chart, but make sure we got this centered. All right. Downside supports, we have red line. Both sides. So now you do these techniques whenever you're irrational or outside of DD bands. You need to mark where support and resistances are. These techniques are very strong. We call them illiquidity pivots. Illiquidity is one-sided market, one-sided selling or buying. You got to use those illiquidity pivots where you will see activity. Let's go ahead and make this a weight like this. These are the numbers that I'm looking at today. So this has support here and support here where buyers created a move up. Be careful on the way down. If we lose this, it's game over for a bigger long haul. Once you break out, irrational markets don't trust what you see. Normal risk and reward steps in. Okay, so I'm a swing trader. What am I going to do? Okay, well, risk, reward. There are potential illiquid trades to be taking place. It means volatile trades inside of this range. So mapping it out, right? You have support there, setups. Breaking this, there's a trade there. Any upside today, like I said, I don't trust anything. I try to get resistance in to a resistance call a day. So I like to use these red lines as possible resistance points. Anytime you break through break through DD to the downside, I always pop up my red lines on both directions. Got one this way and one this way. We've kind of capped our range to likely here for the day. It's a great trick. What I consider a 0DT iron condor for today, being betting it doesn't break too high, break the highs. Betting I wouldn't be entering any kind of stability trade today. When markets are irrational like this. I'd really want the market to be flat. This is a very odd setup for an iron condor. I don't know what Ashton thinks about that. Bear zone back to bull zone. There you go. And that would be the scalp in the S&P, right? Returning to hedge pressure. I'll make my breakfast real quick. I gotta rescue this ETF account. I still need the perfect setup to pull the trigger on it. I'm gonna have to dig out of this one. I know I'm gonna do it. I have to trade really small though. Bear zone back to bull zone, play out nicely. That's always a setup. Vic's really giving it up. I agree, Mark. No volatility here on this. The market's likely to close. Bull zone and above hedge pressure. If all things are normal. If this market deteriorates further, I'd be worried. So it looks like S&P today. If I were to mirror where that red line is on the NASDAQ. The S&P likely back to here at the maximum. As we show how these illiquidity pivots work. You can see there's a really cool process. Don't trust anything you see when float breaks. Like I said, don't chase a short, don't chase a long. Market's going to behave weirdly for a little bit. To test to see if the stock market's crashing or not. When the index are crashing, the stocks aren't, right? I think NASDAQ closed out that second impact, 14,511. The trick is when you have this, when this happens, you want to map out just like I did your range for the day. Pretty easy to see. There's gonna be a lot of redistribution inside here, a lot of fighting here. Watch this. Watch green candle. Then maybe red candle gets crazy again. There could be some pretty decent scalping inside of here. It's like Discord is rolling in its new username feature. I don't know if they're just rolling it out to partners first, but I do have the ability to change my Discord name. Finally, as one of the first people in the rollout. You no longer have those, like a Discord account. I'm going to use, actually, I don't want to dox you, let me choose my old one. Let me show you how it works. So like Discord, normally the name would be like your name plus, show you real quick on my screen here. Normally Discord would be like your name and then some numbers, like number 1, 2, 3, 4. And then of course you'd get a message and it would just say RS Matt, and you would say, oh, Matt's messaging me, cool. Oh, crypto. Oh, somebody wants to invest in crypto, cool. That's not Matt messaging you. There's 9,999 clones that can exist, or 98 clones. So Discord's rolling out a new feature. I don't know, maybe if I'm just the first to do it, you know, being partnered and all right here. No more numbers. I claim this unique that unique name, RS Matt, only one. So the only way somebody would be able to be spoofing RS Matt is if they use some kind of characters. Like, I know there's a character that has like 2 T's in one. They've done that one before. So be careful of that one. I might have to change my name where it's just Matt with 1 T, who knows. But if you see RS Matt with this, like the 2 weird T's as opposed to like T's like this, it's actually MA1. I forgot which character that is, but that's actually a 3-letter word right there. But anyways, no more spoofing and fake accounts. If you get somebody named RS Matt messaging you, everyone has to switch once it's rolled out to everybody. Still, there's going to be RS Matt, probably number 1, 2, 3, 4. I don't know if that becomes unique at this point, but once they roll it to everybody, you'll no longer see those fake accounts. So yeah, but somebody that's brand new to Discord doesn't know. They're not preying on people that understand Discord, right? They prey on people that, oh, the guy's messaging me. Oh, the trader, the guy from TV, or the guy from whatever is messaging me. Oh my God, I'm so excited. Nobody messages me ever. This is cool. Crypto opportunity, amazing. They wouldn't know. The scam artists get a little crazy. One of them tried to scam my grandma when she was alive. Hey, this is Matt. Hey grandma, I just got in a car wreck. I need some money. The police are gonna arrest me, blah blah. And she's like, I'm not falling for this. She called me. She's like, Matt, are you okay? And I'm like, yeah, what's up? She's like, oh, I got a guy on the other line that says he's you and blah blah blah. Send money. They always want to prey on your gullibility. Well, this is hopefully going to be a step in that right direction. So you'll see the rollout changing pretty soon. I don't think you guys can do it yet. I think they're just rolling it out little by little, and they're giving priority ownership to like, or priority name ownership to like partners and things like that. And then they'll give everyone the ability, I think. More often than not, it's like a female influencer messages you. Like my friends that are female traders, for every 1 clone account a week I get, they get 10, 15 a day. You don't know how many iterations of trading chick and blonde broker there are out there, and guys just eat it up. Like, oh, the pretty girl's talking to me. Oh my gosh, sure, crypto, that sounds great. Oh yeah, I heard you on that crypto space that one time. You know what I mean? That's where they really get it. They play the love angle. Desperate dudes get all starry-eyed for the pretty girl. And then you should always understand the first and foremost rule of pretty girls. If they don't always message you, then they don't ever message you. They will never message you. Don't assume they're gonna message you out of the blue for no reason. If you're not the person that got pretty girls blowing up your phone all the time, never believe it when it happens. Now, one person that's talking to you online, they're after your money at all times. Yeah, don't ever fall for that. Monthly map shows for bullish buying tech, and that is a long-term outlook. That's not a today outlook. That's a longer-term outlook. Monthly map is in the next month, it's still bullish. Doesn't mean that it's green day every day. It means the trajectory is bullish. EMPH, okay, last one. All right, take a break. BLD here. Hedge pressure support. So any of the stocks have hedge pressure support here. What I'm looking for. Res is rescuing itself. DD strong. Hedge pressures are breaks are in place. Hopefully the market rescues itself. We got to keep our eye on major stocks that are sitting on the edge today. CMPH is still hanging in there, but just be careful today. Apple's starting to try to rescue itself. Do we hold the fort and crawl our way back up? Resilience ultimately, usually, when resilience and DD are strong, they usually win. Res gets above a 10. Hopefully we're good. It's going to fight here for a little bit, but don't blink. The only thing that's looking bad is hedge break, and res is just right on the fence. Hopefully we get some support here. Pattern maps are so cool. Oh yeah, let me do EMPH for the long haul. Thank you. Very proud of this thing that we made. Love you guys. It's still showing strengthening bull and short squeeze, so it's still crawling its way up. So like buying tech like this, right? It means, it doesn't mean it's bullish today. It means for the next week, there are more bulls than bears. Bears are stepping away, bulls are stepping in. So magnitude of how far that moves has everything to do with the depth of the market. It just means that my mind is buy the dip mode instead of short the pop mode. And that's it. Over the next week, right? Week or two. That's how I interpret it. Right? I try to look for, okay, how am I viewing this? Oh, this is a down day today. Great. Red candle today. Tomorrow I got some greens to come in. Cool, like a lower low for me to long from. I don't say like, okay, crap, I should start shorting this market. This is the week it comes down. It's definitely gonna die. All the bears are there. You can see that they're not. So all I say is, doesn't mean you can't have a red day in the middle of a rally. Typically in rally modes, you have three green days, 2 red days on the way up. It's pretty common. Coolio. All right, love you guys. We're gonna step out of here for a little bit of a minute. I got some things I gotta do this morning. Rocket scooter things. Got a platform to build. We are pushing through our futures project. We're gonna have futures trading sooner rather than later. So we can kind of call it a day. Still strange vibes from this market today. Be careful whatever you guys do. Irrational market can pull everything down. Keep an eye on the big tech stocks today. See if they hold and keep the index floating. If not, if we lose Apple, lose Tesla, it's game over. Don't trust anything you see from here. It's going to be a very crazy day going forward. Anyways, tuning in to later Zoom call we'll have in the middle of the afternoon. Just pay attention to Discord. Post that link up there. In the meantime, check out Rocket Scooter's platform. You guys can have all this information that we give, all of our tools, indicators, as well as our courses to train you on trading risk management. Things you saw today, red lines, yellow lines, DD float, resilience, all this stuff. We have courses on, teach you how all these things work. You know, you're looking at the mechanical side of the market instead of chasing price around. Know what you can trust and learn how to build a good trade plan on risk position management. That's what we're here for. Give you guys those tools so that you can finally wrangle some power back in the hands of y'all's sales as retail traders, knowing where the market makers and institutions are positioned. It's the next generation and future of trading.